Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad. Well, it has been a disappointing day. We have seen every bounce which got sold into in today's trading session, and now Nifty is below that 24,400 mark. Even Sensex, for that matter, we saw that it has tumbled over that 750 points, and now both the headline indices have extended the weekly decline to the 6th week in a row. So the longest losing streak that the weekly decline has seen in the last 5 years itself. Now, if you look at today's trading session, all of the sectoral indices nosedived into the red. Once again, you can see India VIX has popped by about 3% itself, and for the week itself, it has been quite choppy given the double tariffs that has been imposed on India and as a penalty for buying Russian energy. So for the week, Nifty has been down by more than 0.5%, and what did well in this subdued week was auto and the PSU banks back. However, the significant declines that came in, that was from the Fmcg, Pharma and the Realty index itself. But for today, if you look at the majority of the sectors that have nosedived into the negative territory, the majority also decline came in from the Nifty Auto. Then you can see Nifty Energy, Nifty Metal Index, all of them seeing a cut of about 1 to 2% each itself. But yes, coming to the top gainers and losers on the Nifty 50, you can see Ntpc gaining and emerging as the top Nifty 50 gainer with about 1% gains. Titan also on the back of its June quarter performance, seeing a gain of about 1%. Brokerages have also remained bullish on the counter as the company posted a beat across all parameters. Dr. Reddy's lab also doing well, up for the second straight consecutive day with about 0.8% gains. Trent also with about 0.2% gains coming up after yesterday's drop. Dr. Reddy's and HDFC Life are some of the other gainers on the Nifty 50 also. But if you look at the flip side picture, Adani Enterprises down for the fourth straight day now, 3% decline coming in on the back of its tepid June quarter performance. Bharti Airtel also seeing a decline of about 3%. We have seen about 12,500 crore rupees block deal coming in for the counter, where the promoter has probably sold some stake on the counter, and that's why we can see a decline of about 3.3% for Bharti Airtel. IndusInd Bank, Shriram Finance, also some of the financial stocks not doing well. Shriram Finance down for the second consecutive day. IndusInd Bank also seeing a cut of about 3% itself. Other than that, we can see M&M and Hindalco also emerging as the top Nifty losers as well. But yes, on that note, let's quickly get on board with our technical expert of the show. We have Milan Vaishnav joining us. Milan, good morning, good afternoon. Sixth straight week of decline for the Nifty, and we have seen double tariff shadowing the markets. What can we expect the next moves to be in the next week?
You will have to take each day as it comes to begin with, and very rightly pointed out, yes, it's the sixth consecutive week in a loss, and that is one of the worst performing streak over the past 5 years. Now, that being said, I think the more damaging part today is the violation of the 600-point trading range that the Nifty had created for itself since the month of May. We were having 24,500 as a support, and that lower edge of the trading range has now got violated. That is the first technical damage that we can say that the Nifty has inflicted upon itself. That is one point. Second point is that from an immediate short-term perspective, if I say, then yesterday's low point of 24,344 has also been mildly violated, but that's a very short-term look on it. It doesn't have some significance. But now, if I zoom out a bit, there are two things that I see on the charts. Is that first of all, the Nifty has dragged its resistance levels lower. Earlier, it was 24,700 to 25,000 range. Now, those resistances have been dragged lower to 24,500. And that means that the longer we stay below 24,500, higher would be the chances that we might get slipped under some secondary kind of a trend. That is point one. And point two, I see the markets now heading back towards the 50-week moving average, which is placed at 24,200. And 24,000, as of now, at least also shows highest accumulation of the put OI. Of course, it is not as large in terms of if you compare them to the calls OI, but yes, 24,200 is the next area which we can look at for supports, and 24,500, unless taken out on the upside again, will continue to pose significant resistance for the Nifty going ahead from here.
Okay, all right. Those are the levels that we need to watch out for. But the underperformance in mid-cap and small-cap indices have continued for the third straight week itself. What can we eye out for these pockets? Can we expect the underperformance also to continue from them?
Market-wide underperformance, yes. And the another change in fabric that I'm noticing in the markets is that now it's no longer a sector-specific market. So we will not be able to isolate the sectors that are showing that are trying to relatively outperform. You will not able to isolate those sectors which are sectors as a whole may stay weak. But this has now become a very stock-specific market. Let's say, for example, auto space. Now you will see stocks like Tata Motors not at all doing well in the current markets, but some of the components like TVS Motors and M&M have stayed very, very resilient. So this has become a stock specific market, and the only way to navigate such turbulent phase is to stay invested in the stocks that are showing good improvement in the relative strength. We have to stay put with relatively stronger stocks if we have to, at least give some cushion to our portfolio in such times.
That's right, Milan. It's become a stock-specific market right now. Let's also take some stocks in focus. We'll talk about Titan first. It was one of the top Nifty gainers today in this subdued market. Basically, the number was June quarter numbers were beat across all parameters. We even saw brokerages have turned quite bullish on the counter. We saw CLSA maintain an outperform call. Jefferies also retained a buy call on the counter, and they've hiked the target price itself. However, today the stock was up by 1%, but for the past 1 month, the stock has been fairly range bound. Milan, can we expect some positive momentum to sustain, because the street has given another 20 plus upside?
Yes, I do expect some upside momentum to sustain as long as the stock keeps its head above 3350 levels. And while it stays above 3350, I also see that one of the breadth indicators, that is the accumulation distribution oscillator, that has also gone into the green, meaning that the stock has witnessed some good volume participation in its recent rebound. So yes, I expect some momentum to continue, but that comes with a caveat that it will need to protect 3350 level.
Okay, all right. Let's also talk about LIC. That was also one of the stock performers today. 3% uptick coming in for the counter on the back of its stable June quarter performance. Despite the moderating gains from its equity sales portfolio, core operating performance is what aided the bottom line performance as well. And the company has not offered any growth guidance for FY26, but it is aiming for double-digit bottom line expansion for FY26 itself. Now, brokerages have also remained fairly bullish on the counter. Macquarie shared an outperform call and shared a target price which was close to the stock's all-time high levels itself. But yes, now Milan, majority of the brokerages are expecting LIC to surpass its all-time high levels as well. What are you watching out for?
Surpass its all-time high, that would be a kind of a marketing statement, I would call it. But if you look at the charts from a technical perspective, the stock has successfully reversed its trend once it formed a very good base between February and April of this year. And since then, it has moved above all of the key moving averages. That was technically significant development. Having said that, what we saw over the past week was some minor corrective retracement, and the stock has found support at the confluence area of two moving averages. One of them is 200 and the other one is 100, and that's where it bounced back from. So that lends a kind of a credibility to the support area that is between 860 and 880. So that level, with acting that level as a support, yes, I expect the momentum to continue. Moving past all-time highs, that was something I'm not aiming for, but from short to medium term perspective, I'm certainly expecting the stock to move at least above 70% from the current levels.
Okay, all right. Let's talk about today's top mid-cap loser. That was your Kalyan Jewellers. The stock has declined about 9% in today's trading session, despite the stable Q1 results we saw. While we did see top line and bottom line growing in strong double digits from a Y-on-Y perspective, what made the street cautious was the management saying that they're pausing the further debt reduction plans itself. Heavy volumes were seen on the counter. Milan, what can we watch out from the next support levels for Kalyan Jewellers?
Kalyan Jewellers, if we talk about the next support levels, that should come anywhere near 480, which is quite somewhat down from the current levels. By and large, stopping of the debt reduction program, these are all fundamental aspects that the street did not like. But overall, by and large, all these gems and jewelry, pocket apparels, textiles, this seafood, and some of them from the agri space, they are all tariff impacted, at least sentimentally impacted in that way. So I expect for people who are holding long in Kalyan Jewellers, perhaps this is the time to exit. And just because the stock has come down to this extent, it would not qualify for an entry. Perhaps I think we should now leave Kalyan Jewellers on the sidelines.
Okay, from the sidelines itself. Let's also talk about SBI because that came out with its June quarter performance in today's trading session. We did see that the profit rose up to about 12.5% on a Y-on-Y basis. Net interest income, however, decreased by about 0.3%, and domestic NIMs that dropped about by 33 basis points from a Y-on-Y. The stock was flat today, and the stock has been fairly range bound so far this year itself. Milan, what can we watch out from a levels perspective for the largest PSU lender?
Sure. See, what I'm seeing in the overall PSU space is quite a kind of polarity between its components. There are some components which are technically very weak, completely devoid of any kind of relative strength, and there are some pockets which are relatively very stronger. And SBI is one such stock. If you see, it is trading almost at the same level where it was. When it's at the same level as it was in the month of May. So what I'm trying to drive home a point is that it has demonstrated considerable relative strength against the declining markets, and it's likely to be one of the relatively outperforming stocks over the coming months, as long as it stays above 775.
Okay, all right. Let's also talk about Tata Motors ahead of its Q1 results, which is due today, expected to report results in some time in today itself. But yes, according to Moneycontrol poll estimates, we're expecting that the revenue is expected to decline in single digits, while net profit is expected to decline sharply in double digits, that is by 33% on a Y-on-Y perspective itself. And today also the stock is down about 2%, third consecutive day losses for Tata Motors. What are we expecting, Milan, for Tata Motors? Because any bounce that we are seeing is getting sold into for the counter.
Technically speaking, the stock remains weak from a portfolio perspective. I would still stay exposed to Tata Motors as long as it is defending its most recent swing low, which is placed at 538. But that being said, what worries me is the violation of major support on the higher term charts, and that was somewhere around 645 to 650. So I'm afraid that if it stays below 650 for long, it may well continue with its underperformance vis-a-vis the broader markets.
Okay, all right. All right, just one last question before we let you go, Milan. Any topics that you want to highlight, amid this volatility, this tariff volatility that we are going through at this time?
Yes, I need to highlight not just one, but a couple of things. First of all, yes, I would very strongly suggest that that during such times we need to stay reactive to the technical developments and not try and get predictive in nature. So that being said, yes, violation of 23,500 is a matter of concern for me. So I will keep my mind quite focused on how long we stay below this level, because that would mean that we might get pushed under, some sort of secondary downtrend. But at the same time, I would also leave a couple of things here to ponder, that I need people to understand and remember that just because the markets have fallen or a stock has fallen 10-15% is not a reason enough to buy. And they should be extremely selective. They should bear in mind that this has become a stock because market, a stock specific market, which is sector neutral but highly stock specific. So they need to make sure that they stay invested in the stock which is exhibiting strong relative strength. That is the only way to safely navigate such turbulent times, regardless of the sector they are invested in.
Okay, yeah, it's clearly become a stock pickers market, and we need to be ahead of the volatile times. But with that, we have to let you go. Milan, thank you for joining us, and hope that we connect with you soon.
My pleasure. Thank you so much.
All right, that's all we have for today. And this week itself, the tariff noise continues. And over the weekend, we'll watch out for more commentary if there is any from the White House and from the US President Donald Trump itself. But we'll be back with markets next week. We are in the last lap of the earnings season, so we'll watch out for some more stocks in focus. But for now, have a happy weekend and thank you for watching.